Hey, good morning, everybody. Good morning, good morning. Hey, Valerie. Hey, Andreas, Alan, Kimberly, my lovely bride. How's everybody doing this morning? Great. And the temperature dropped a little bit cool this morning. I got my hoodie back on. Yesterday I had it off. It's supposed to be relatively warm today, but I don't know. We'll see. Uh, they're forecasting back into the frosting temperatures overnight this week. I was like, what the heck? Yeah, Kimberly can comment. I was all upset about it last night. I was like, I thought we were done with this cold crap. Anyway, how's everybody doing? Big news yesterday. We kind of hit it a little bit during the morning show, but I pulled up an actual article, and I guess we should do the disclaimer before I jump into it. So, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be completely full of crap on any prediction I make. This presentation here, informational, educational, and fun, is not a recommendation to buy or sell any financial instruments or anything else. Not a recommendation to buy anything. So, if you desire that personal financial advice, hire and consult a financial advisor that can advise you on your personal situation. So anyway, yeah, I should quit saying Notice I said that a lot. So S&P 500 still in the danger zone, still sideways for at least the past year, and if we zoom out a little bit, like the last 2 years. So this is less than awesome. And we just keep chopping. Chop, chop, chop. I mean, and really looking at it from this view, that's like a watermelon seed squeeze play. It's going to pop up. Is it going to pop down? Well, time's going to tell here. So I was looking up some stuff on the rates, like what the Fed may do in the future here. I may talk about that later this evening at 5 o'clock. I go live again and take requests for at least 30 minutes from you, but I give you a little bit of market analysis, a little more in depth than I do here in the morning session. So popping over what I brought for today. Let me pull it over here. Seasonality, right? Actually, First Citizen acquires failed Silicon Valley Bank. Regional bank shares jump. This was yesterday. So we have that First Citizens Bank. That's a North Carolina bank buying out, not completely, but they bought, what, $72 billion? And they got a huge discount, discount of $16 billion. But around $90 billion remains with the FDIC under receivership. And somewhere in here, yeah, right here, I guess the FDIC is taking a $20 billion hit on the assets that they seized. So $20 billion cha-ching right out of the insurance fund. Now, I love how they keep saying that none of this is coming out of taxpayer funds. Oh, okay. How do we define taxpayer money? Like, is it the money we paid in taxes that they deduct? Or, I mean, they're like, oh, the FDIC, all that insurance comes out of, what the banks pay. Okay, where do the banks get money? Get it from you and me, all right? People that do business with them. It doesn't even matter if we're talking about, oh, well, they get it from the big companies. Okay, we do business with the companies, right? They put that little padding in their product prices so that they can pay the insurance to the bank, I mean, like, we pay for it regardless. It's just a bullcrap game. Who said how we want to pay for it, all right? We're paying for the FDIC insurance, the $20 billion hit. Whether you want to pretend like it comes out of the whatever, line item here, line item there. All right. Anyway. KBW may turn the bottom, but like I said, I don't think this whole banking crisis thing is over yet. This reminds me of that like first drop we got in 2007-8. The first thing that blew up, like the Lehman Brothers blow up, and then we had other stuff unravel, and then everything got horrible for a good long time. And like I said, I'll talk about that later this evening. I'll bring some charts and some statistics on rate cuts and hikes and all that junk. All right. So come back tonight, 5 p.m. Make sure you're subscribed and hit the bell thing for notification when I'm going live. It'll be 5 p.m. Eastern. Hey, Jason. Hey, Kevin. Glad to have y'all with me. Anyway, so that's what I got to say about that thing today. Now, they could still blow up the market, and it's still a big risk out there. Now, moving on. Seasonality. We're kind of right here looking like we're getting this little dip in. I mean, while the S&P 500 has been churning and dipping in, on deeper into March, which we can look at right here. If I zoom this one up, see, we usually get some chop on deeper into March, and that's kind of where we're at right now, doing this little chop thing, right? Well, as we move on into April, historically, for the last 20 years, we see April being one of the best months of the year. Now, is it going to happen again this year? I don't know, but so far the seasonality has been pretty bang on this year. If not a little bit accelerated, we've been hanging out pretty spot on. So right here, we're hanging out right in this dip right at the end of the month, and then April's pretty good. Now, arguably, this SPX looks like it might outperform NASDAQ just a little bit on this next push, but the NASDAQ chart is kind of compressed because it goes up to 14%, whereas the S&P chart only goes up to about 10%. So the scale, not exactly the same. I didn't make these charts. They came from equityclock.com, and they are a sum of the 20-year seasonality. And that's just taking each day and how much the market usually moves and then summing it up. So there is a seasonality pattern to the markets. All right. Hey, good morning, Jason. Morning, Suckbear. Morning, everybody. Anyway, also, we have the VIX seasonality. If you've been counting on the VIX to continue higher, we're kind of past the peak, already coming off. SVXY, short VIX, could see a rally into late April, possibly late May. I bought those June calls, if you recall, if you're in Discord. I bought those June calls a couple weeks ago when we were kind of right around here. We're getting a little chop still, but I expect it to return back to where we were, at least to zero for the year. Yeah, back to the start. So we can look at the chart and what that actually means here. Oop, I covered up the chat with that when I threw it on the other screen. There we go. So look at the VIX. This is one I don't usually pull up a whole lot, but here we are. So we started out at the beginning of the year. We're already basically down there. And we got those little spikes, and VIX came right back down. So SVXY hasn't really responded quite as much. See, it was up here. Right at, I guess, January 1st, it was down here. We're basically flat with that. It kind of spiked up here in February and spiked up there again in March. And then we got the little freak out with the banks, and then seems like we're on a path to get back up in there. Kind of expecting 66. I bought $60 calls, which are now in the money. And we could push out to 70, or even this longer term 72 area. Or most ideal, I'd be super happy if we saw a push out to this 75 extension right up here where we get some confluence of some prior move. And the current pullback right up here around 75. You might say, well, JT, we haven't ever seen prices that high on SVXY. Well, guess what? This thing can just start going. I mean, this is not an oscillator. This thing trends, all right? And right there, 69. We have the split back here, which messes with the prices, and a split back here that messes with the prices. So, and there's the big 2020 drop. This one does not split a lot. Like if you look at UVXY, right here, we have these periodic splits they have to do to keep this one under control, because it decays to nothing. All right, look, split, split, split. These are all reverse splits to keep this one listed. They're gonna have to do another one before long, because this thing's already down to 5 again. Every time they do one of these reverse splits, it's like a 10 for 1, that reduces the sensitivity of this thing by a factor of 10. You could say it increases, I say it decreases. Because look, the little moves are getting smaller and smaller. It amplifies the past moves. But this thing just keeps on decaying. You know, there's 2020. I feel like it's amplified by a factor of 10 because of this reverse split right here. It's never doing this again. And when I was trading it, it only got up to like 80, not to 1200. It may have spiked up to 120, but it was very short-lived. So remember, these are, every time one of these splits happens, it amplifies. That one was a 5 for 1. This one was a 4 for 1. There's a 5 for 1, a 5 for 1, and a 5 for 1. So right now, I'm not a big fan of UVXY. It's a decaying asset. That means it's always going to 0. This one is not a decaying asset. And one of these splits was reversed, and one of them was, you know, that was a regular split, 2 for 1. And then this one was inverse, 1 for 4. So looks like we can keep on going as VIX returns back to 20. 20 is the historical bottom. Back before all the chaos, we used to see 12s as a resting VIX. I'm popping this back up once again. And back over here, we were seeing down to 10s even in 2017-18 when things were kind of calm in the market for a good long time. We get these little spikes, but we just right back down. This was when selling VIX was popular. And then VIX blew up. Like the VIX trade blew up. Short VIX. So SVXY is the current one I like as far as VIX returning back to 0. Like we had this big freak out. We don't get those big freakouts all the time. And if I go back to the weekly chart, you can see they happen about every 10 years or so. So I wouldn't expect, we might get some little spikes, but I wouldn't expect another one of these monsters for a while. All right, that one back there. 08, this one right here in 2020. So it's about 12 years between them, and we don't really have enough history to go back and see the one before that. The .com stuff blowing up didn't create a giant VIX spike right there. So for those of you that think that VIX blows up every time the market freaks out, it's not every time. And this one, we all thought we were going to die. You know, this one back here, we thought it was the end of the financial system as we knew it. And we may be staring it down that again, you know, but time will tell. Right now, the market's saying, it's kind of chill. All right. We're not pricing into the world scenarios right now. Into the financial, and we're not pricing in the market going to a lower low. This is like, we're just going to hang out and drift higher. As this thing pushes lower, back down into possibly this zone where it was consolidating all last summer, into the fall, that SVXY is just going to continue to climb. All right. Now, what we all came for, what's happening today? As I said yesterday, I kind of expect this sideways little drift higher. Maybe, yesterday we tried to push up, got rejected out of that box again. So that's 1, 2, 3 times we've rejected out of that blue range up there where the tails are. We got to get above it, and then above that one. So we've got layers of stuff built up against us. We've got layers of support below us. Yesterday was a heck of a range up and down. We're just kind of hanging out here. I'm on the weekly chart, so looking at the daily chart. Yeah, that was last week. So yesterday, just hanging out right on top of the roadmap line. Little doji. There we go. Back to the daily chart. Today, back to the roadmap line again. Just hanging out right here. inside days, no decision, drifting sideways. NASDAQ consolidating, still at the highs. Little bit of red yesterday, but still inside this consolidation, just hanging out right there. We may see a bigger pullback on the NASDAQ. May see it in the ES. It may happen. You know, that if I go find that seasonality chart one more time, pop back over here and look. If we zoom this up even more, we usually see a little spike down in NASDAQ right there. Pull this on over. I mean, we're, 2%, 0%. It's just historically, so that's what, maybe a 0.5%, 0.3% pullback right there. And then we see it launch out of that pullback. So if we do get a pullback, that would fit with the scenario I've drawn right here, that we would pull back and launch. All right, so just keep it in mind. Then Russell continuing to hang out in this stupid box down here, consolidating at the lows. Not really doing anything, not continuing lower, not breaking out higher, just consolidating down here. Everything just kind of consolidating. That's everything sideways consolidation. Consolidating at the highs, consolidating in the mid, and consolidating at the lows. That's kind of the story of 3 indexes right now. Now we have the end of the quarter is, basically this week. So you got window dressing, you got lackluster everything. There are tons of flows that come in. Think about it. Everybody gets their either weekly pay or twice monthly pay or monthly pay, and it all hits the retirement systems. It all starts getting deposited toward the end of the month, into the new month, and then all that money gets dumped into funds and, index funds and other funds and BlackRock funds and, all the retirement funds. And then they have to put that money to work. So that money flows in, and we have the new quarter coming in next week. So I expect maybe we hang out sideways a little bit and then break out one way or the other next week. Now, dollar continuing to try to push weakness. If we get down below this tail we made back here on Thursday, we can see this push down to the 90s. I keep saying that, but that's kind of the path right now. It looks like we're well below the bounce here. We retested that resistance for 3 days, and then we're down, and we just keep drifting lower. We could see some big push lower, something like this. We could see some candles like that rip out of here, pushing us lower toward the 90s on dollar. BABA popping up just a little bit. We got the market open now. Popping open up right to the roadmap line. Left a nice big fat gap that it may or may not retrace. If we break up about this, got resistance here. If we can get above that, then we're probably on a path to go up to 145. XRP, maybe the regulatory news on this one turning positive, but we still have these highs up here to contend with from back here in the fall. That can turn down right there and go lower. And this is not an overly bullish chart yet. You may say, oh, you just don't understand this, everything's going to be peachy keen on XRP. Why would you use XRP? What problem does it solve over Bitcoin and Ethereum? All right, bring me a list out and we can talk about it. VKT, pharmaceutical, probably some drug approval or something. Yeah, trial for obesity. And hard to predict these like giant pops and fits and whatever on pharmaceuticals and biotechs. GHSI, another pharmaceutical getting a little pop. HOFV, Hall of Fame Resort. Yeah, it's an earnings thing. I guess less bad. They still losing tons of money. That one on a path to be in trouble here. Looks like they did a giant reverse split, which is bearish. You can see it was like traders were immediately bullish, but then hit the roadmap line and right back to the lows. Probably going to push lower low because reverse splits are not ultimately bullish. I don't care who wants to argue with me on that. I'll show you 100 charts that look like this where short term, but long term, we make a lower low almost all the time. BMEA, another pharmaceutical. I should just like knock those off the list before we start even. Paramount, what they got? What they got today? They announced Paramount Plus Plus or something. I don't know. It's just that's bearish still until we can get above this stuff. I mean, lower highs coming down through there. Still looking kind of bearish. Binance making headlines because, hey, the company got a giant lawsuit from the SEC, and the excuse was all of Bitcoin pulled back, Ethereum pulled back, all of crypto kind of pulled back. Binance freaking out here, but I don't know. Interestingly, I was reading this morning that the U.S. government sent almost 10,000 Bitcoin to Coinbase and started liquidating them. Did that happen to correspond with Bitcoin pulling back yesterday? I mean, was that the U.S. government liquidating Bitcoin a little bit? I don't know. When we look at it on the daily here, we're just consolidating right here. We completed the head and shoulders target. That happened right there. Expect a little bit of pullback. We could come back to this 25,000 area, find support and bounce. That would be pretty typical. And we got to the extension 1618. Look at that. I mean, right up to the extension, pulling back right to here. Be classic before we get the next run. And another potential possible pattern here is to pull back just the same size we did right there, which put that up there. That could bring us back to 23 one more time. Back to the roadmap line. Those are all in the cards for Bitcoin in the next couple weeks here. Maybe even a couple days. So if we do get the pullback, we find a support and start bouncing, watch out above. It can just start ripping again and leave you in the dust. So WBA. Walgreen Boots, looks like earnings today. Beating on the top, beating on the bottom, getting barely any kind of pop. Must not have been a big surprise. Still on somewhat of a downtrend. If this can hold a higher low here, we can break out over this. We can finally reverse the trend on Walgreens. SNX, still looking like, that just looks like sideways chop. That's like a three-wave up and a big move down. This thing could extend lower right here. Yeah, holding the 618. This can be bullish if it breaks back above the roadmap line. Could be bearish, though, if we continue down through 85, 86 here. May extend lower to 70 on SNX. PHV moving. Nice pop there. Earnings pop. I'm beating on the top, beating on the bottom. Probably a positive outlook. It's actually an entry. Maybe an aggressive entry. Yep. Aggressive entry here for 100 or 108 on PHV. It's not going to be an instant play. It could retrace. I would be careful. You want it to close the day up here, not just buy it now and watch it retrace and fill the gap. It does tend to kind of leave the gaps open a little bit. And we do have resistance there at 93 and up here at 124. I don't remember when I drew that arrow, but it hit the arrow. I have no idea. Anyway, ITCI, another biotech pharmaceutical, getting a nice pop, probably on some sort of drug. Something, yeah, new data for depression drugs. Baidu, working on breaking out. get out over 170. We could probably run up to 200. MKC. Nice pop there. Earnings pop. Beating on the top, beating on the bottom. Probably a positive outlook. Spices. McCormick. I saw, what was it, GIS was popping too? Look at this. This one looks like a potential breakout right here. Remove some of these old lines. That one's probably going to run out to 92, 96. Wasn't even on the list as a mover for today, but that caught my list on from IBD. Investors Business Daily sent that out last night, that it was a potential cup and handle, I guess cup and handle breakout right there. I give it a 92 target. So YINN, looks like China Bull. Not looking the most bullish right there. Yeah, spicy. Except that was GIS, not McCormick. Yeah, McCormick is spicy, but that's a spicy move up. If we can break out above that extension, and that was the lowest low. So be careful right there. That did make a lower low right there. Reset the count. You know, that can just break out and go, but I would be very careful. It's got to get above that to go up. Otherwise, that's still a downtrend, especially if it makes a lower high and starts down again. Lower low. Be careful on that one. All right. This one, let's see. Where do we get? 618 retrace. Potential to break out, but we got to get above the roadmap line. And these leveraged ones don't always respect the fib levels as well. CWB, another China Internet bull. And, I mean, that doesn't look the most bullish between these two right here. Like, that's not a super, like, ooh, I'm excited kind of pattern. So be careful on those. LOVE. Man, that, if we get above right here, above 20, above 30, that one looks like it can start going. I have no idea what this company does. Consumer durables, never even heard of it. Beating on the top, beating on the bottom. They make quite a bit of money. Lost money, made money, lost some money. No, made money. Estimated to lose money, but they made money. Made money. Made money. Made money. And they make money, whatever they do. I don't know. Let's see. FUTU. Just consolidating in here. SQM. Minerals. That looks like a downtrend for, lowest low right here. Be careful. It needs to break out of the downtrend before you go chasing a lot of these. Myrna. Oh, look at that. Right to the target. I haven't even looked at this in a while. This one can reverse out of here because that was the... If we start breaking back above the roadmap line about 170, this thing can go on a next run. That completed the head and shoulders pattern right there. And hit the support at 136. Beautiful. All right, STX. That one showing a little weakness. That's a lower high, potentially going lower low. Be careful. Hard drive technology, not exactly the most favorite. So KO, getting a little pop, but still in the downtrend. Lower high. I feel a lot better if it's up here above 63, 64. PEP. That one actually getting above the 618 level. That one looking better than Coke right now, honestly. 192 would be the upside target. Then let's see. Monster, breaking out higher potentially. This one, the retrace was not huge to the roadmap line, so maybe 53, 54. And what's the, let's see, LH Celsius. Now I'm looking a little more bearish. All right. Let's see. KDP. Yeah, that one's still looking pretty bearish too. So don't just think drinks are hot. Get it? Hot. Keurig. Anyway, KO maybe. Pep looked the best at it. Pep and Monster looked the best out of those. Monster, come sponsor me, Monster. Anyway, sectional furniture. Yeah, I have no idea. Anyway, that's kind of what I got today. That's what I got my eye on. Remember, 5 o'clock tonight, I'll take your request for 30 minutes, at least 30 minutes. Give you a more in-depth market update on some of the rates and the interest rate stuff I've been talking about on and off for weeks. And come join me. We'll have fun tonight. So 5 o'clock, make sure you are subscribed and hit the bell with the notifications so you get an alert when I'm going live. And I'll see you later. Set an alert in your phone. Yeah, come join me. Thanks for coming this morning, and I'll see you this evening.